Have you ever wondered what it takes to pay your house off early? I know when we take out a mortgage, you're taking out hundreds of thousands of dollars of debt, and sometimes that freaks you out. But in this video, I'm gonna give you 10 hacks to pay your house off early. But make sure you stay to the very end of this video. I'm gonna give you a secret in the mortgage industry that not a lot of people are aware of that can truly save you tens of thousands of dollars, if not hundreds of thousands of dollars on your mortgage. Number one is a weekly payment. So I just did a quick Google search and I found this website called Omni Calculator, and you can literally put in a rough estimate of what you could afford if you were to make weekly payments to your mortgage. So let's just say we have a $400,000 mortgage. It's a 30-year loan, interest rate of 6.5%. And let's just say we want to throw an extra $200 every single week towards our mortgage. As you can see here on our calculator, we're paying an extra $1,000 a month. Instead of a 30-year mortgage, it actually takes us down 15 years and 10 months. So it literally cuts our mortgage almost in half at that point, simply by paying an extra $200 every single week. What if we were to cut that down to even $100 accelerated every week? We'd pay an extra $600 a month, and it shaves off 12 years of our mortgage. So just little strategies like paying your mortgage every week, paying an additional amount every week can literally mean the difference in paying your house off and saving. If you look at these numbers, at $400,000, we would have paid $910,000, including $500,010 in interest. So we're saving over $230,000 in interest payments simply by adding an extra $100 a week to the mortgage payment. And number two, you can use the cashback feature on credit cards and take that extra funds and apply it to your home mortgage. This was something that I wasn't even thinking about until I really started to look into this. And it makes a lot of sense because if you're like me and let's say you put everything on an American Express card and I pay it off every month, I'm building up all these points, and essentially I could use the cashback feature. Or if you get really smart and you start looking at some of these other credit cards where you can maybe get 5% back on gas or groceries or dining out or something very specific, you can then build up even more rewards and more cash back. And now every single month or every quarter or however often you decide to pull that cash out, I would use those funds and apply it to your mortgage. Just like I showed you in our first example, just by applying another $100 to $200 a month can save you tens of thousands of dollars on your mortgage payment. So if you use your credit cards wisely, it could also save you a ton of money on your mortgage. Number three is to get rid of your mortgage insurance as soon as possible. If you're in an FHA loan, remember the only way you can get out of your mortgage insurance is to refinance into a conventional loan. However, if you have a conventional loan up front, you want to make sure that the minute you get to that 78% LTV or loan to value, you are either contacting your servicer, the company you make your mortgage payments to, for them to then take you through the process of removing your mortgage insurance, or you can reach out to a lender like myself and we can get a refinance done and remove the mortgage insurance. Let's say your mortgage insurance payment was anywhere from $100 to $200 a month. The minute you remove the mortgage insurance, you would then continue making the same payment that you initially had, but applying the extra $100, $200, $300 towards your principal balance. And again, you're accelerating your mortgage to save you money on the interest and paying your house off that much faster. And number four, you can also look at making bi-weekly payments. So again, let's look at the website here on Omni Calculator, and we're gonna look at the same scenario, $400,000 loan, 6.5% interest rate, and we're just going to add an extra $100 a month, and we're going to accelerate a payments to be bi-weekly. We're adding another $400+ towards our principal payment, and you can see we're shaving off 9 years off the mortgage, which takes us from a 30-year to a little over 20 years, which is saving us $189,000. So just by making bi-weekly payments, if your servicer allows you to do that. Now remember, the servicer is the company that you're making your payments to. So it may not be the original lender that you got your loan from, because a lot of times mortgage companies will sell their loans on the secondary market. So they may get picked up by another servicer like a Mr. Cooper or Wells Fargo, some of these other banks that do service loans. But all you need to do is contact them, see if they allow a bi-weekly payment, and you can see something as simple as this. bi-weekly payment, adding an extra $100 is saving us over $180,000 over the life of the loan. What could you do with an extra $180,000? That's a ton of money that you can go buy other investment properties. You can invest into anything like the stock market, real estate, crypto, put that money into your kid's college fund. This is where we can all be a little smarter about our money, how we manage it. That way we can best utilize some of these asset classes that are out there to start building some generational wealth for our families. Number 5 is refinancing, but you need to be very smart and intentional about the refinance. And the reason why I say that is because I've had a lot of clients recently that bought homes in the last couple of years and they got their interest rates in the 2s. And now they're looking at cashing out and doing a refinance. There was a client I literally just spoke to right before we shot this video. Last year we got him into his home. His rate was 2.5%. It hasn't even been 1 year yet. And he's calling me and he's wanting to take cash out of his house. Now, as you know, interest rates have gone up. The rates that we're looking at today are going to be in the 6s. So in his situation, the fact that we need money that quickly only means that he's racked up his credit card debt, which is what he told me, and why he's wanting to consolidate everything. So this is why when you get into a home and you become a homeowner, you have to be smart. You have to be diligent about your finances. If not, you're going to run up your credit cards and now you're using your house as a piggy bank and you're going to take the debt all the way back up. And especially we have appreciation these last few years. You're now taking on a higher loan balance than what you initially purchased the home for. And in his case, he'd be looking at an interest rate almost 3 times what he initially got when we did his mortgage. That doesn't make smart financial sense. So if you're looking to do a refinance, don't just run out and do a refi. I've talked about this numerous times in my videos. You have to do your due diligence. You have to make sure that the information that you're looking at is transparent. The lender you're dealing with is being honest and giving you options and not just throwing you into a mortgage. And then you're just figuring it out later that, oh my gosh, I shouldn't have signed those loan documents. And what did I get myself into? Which I've also had happen as well, where I've had clients that went to other lenders to refinance because their rate was better than mine. And they literally called me 6 months after their initial refi. And now they wanted to refinance again. These are the types of things that prevent you from paying your house off sooner. So if you're going to do a refinance, make sure that you're doing the right thing and be smart about it. And number 6, you can make a lump sum payment. So if you are working in an industry kind of like us here in the real estate or mortgage world, or maybe every once in a while you have a really, really good month and you have a bunch of extra cash laying around, you can use that money and apply it to the principal balance. Maybe you got a settlement or some extra funds that were coming your way that now you can apply that money towards your principal balance. And again, accelerating the mortgage to get that house paid off. And by the way, if we haven't met before, my name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across the country. Whether you're buying your first house, looking to build your real estate portfolio, or looking at a refinance like we're talking about, I'm here to help you. You can hit the description below for links to more information on how to contact me for a second opinion, or if you're looking to get qualified. And of course, I would love if you subscribe to my channel as I put out content like this every single week to help you get your mortgage right. Now back into our list. Number 7, you can also look at making quarterly payments. So depending on maybe what your pay structure is like, I know I have some friends that every quarter, they typically receive a larger check from their work. That's also another great time that you can take a portion of that, apply it to your principal balance, whether you want to make a quarterly payment, or maybe you want to just apply monthly payments or weekly or bi-weekly like we shared earlier in this video. There's so many different strategies that you can apply that extra funds and put it towards paying off the house. And number 8, we're looking at tax refunds. Remember, if you get a refund, use that money to pay off the house faster. Don't go out and buy the newest pair of Jordans or go out and buy a Louis Vuitton bag or something that you're going to spoil yourself with. But don't get me wrong, there's nothing wrong with doing that from time to time. I know I'm guilty of doing it. But if your goal is to truly pay your home off, you have to be disciplined for several years and make these sacrifices so that way you can pay your house off. So if you're one of the lucky ones that gets a tax refund every year, go ahead and apply that money towards your principal balance so that way you can achieve the goal of financial freedom. And number 9, rounding up your payments. This is something that I've actually done myself over the last several years. So no matter what your payment is, you either can round up to the next dollar, next $10, next $100, whatever you can financially come up with and you're comfortable doing. I think it's a great way to add additional funds towards paying off the house, and it really doesn't break the bank because you're not thinking about it too much, and you just round up to the next whichever figure you're most comfortable with. And again, every little bit counts. And last but not least, the big secret I wanted you guys to stick around for, it's called recasting your mortgage. So this is something that not a lot of homeowners are aware of. What I would recommend you doing is contact your servicer. So again, the company that you're making your mortgage payments to, and ask them if they allow for a mortgage recast. Basically what a recast is you are making a lump sum payment. They will then readjust your mortgage based on that new loan balance. So let's just say in our example here, we have a $400,000 loan. And typically what I've heard in the past, you have to bring in at least $50,000 or more. Because I actually looked at doing this on one of my properties, and the minimum that they wanted was $50,000. So at $400,000, let's say I did pay the $50,000, they would then re-amortize my payments based off the $350,000 balance, and I'd keep the same interest rate. So that's also another way that you can then, one, lower your payments, but two, you can stay disciplined to the goal, which is apply the savings back to the original payment. So that's another way that not a lot of people talk about or even are aware of, that you can then take these big windfalls that you may have from your business, side hustles, selling another property. You can use that money, throw it towards a mortgage, readjust your payment, and get that thing paid off that much faster. So make sure you check with your servicer first before you get ready to shell out a ton of cash. You want to make sure what their policy is and if they allow that, so you know exactly what you're getting into. Those are my 10 tips to help you pay your house off faster. I hope you can see that just the littlest amount applying towards your principal balance can save you tens, if not hundreds of thousands of dollars over the life of the loan, get you out of debt, and own your home debt-free. Thanks for watching. I'll see you in the next video.